The US dollar is very likely to strengthen in an environment in which the global economy is slowing down and at the same time fiscal, monetary and trade imbalances of most emerging economies are rising. The US dollar remains the world's reserve currency, and it's proven to be extremely resilient in an environment of a banking crisis followed by a debt ceiling crisis. Incredible how strong the US dollar index has been in that period. Furthermore, it's proven to be a lot more strong and a lot better than the yen and the euro, which are showing their weaknesses in an environment in which the US dollar is not precisely showing its strengths. And that's the problem of fiat currencies, that they're relative to each other. The debasement of fiat currencies is extremely evident. It's happening at the US dollar level, which is strong relative to others that are much weaker. And that is likely to get worse. Look at gold. Gold has strengthened very significantly in that process because the market shows and sees that gold is real money and it's a safe haven in an environment of currency debasement. Currency debasement is something that we may think is unlikely, but it is a very gradual process, and all fiat central banks in the developed world are conducting it. From the Federal Reserve, the normalization is much more weak and subtle than what would have been imagined in an environment of high inflation. Same with the European Central Bank. But ultimately is that governments prefer to see their currencies lose purchasing power than to reduce their fiscal imbalances. So governments, through their central banks and through fiscal and monetary policy, are becoming a tool to transfer the enormous imbalances of the government to savers and to real wages. And that process is slow but inevitable. That is why it's so normal that gold performs quite well in an environment in which we are seeing constant purchasing power contraction of the fiat currency world. And at some point, the confidence in fiat currencies is going to become even more challenging because the quid pro quo that citizens accept of a little bit of inflation, 2%, etc., for higher growth and higher credit growth actually doesn't happen. You still get high inflation, yet not the level of growth that you expected, not the level of real wage growth that you expected at all, and certainly not the level of credit growth. So the sort of agreement between citizens and the central bank to accept some form of currency destruction in order to get better wages, better jobs, and better credit are not happening. And that impoverishment ends up taking away the confidence in the fiat currency.